Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello friends, looking at natural gas on the hourly time frame to start. And in the last video I did, we were looking for support at 3361 to 3358 to be exact. There's a 0.3 of a penny range of where that level has been finding support and resistance. So just to recap, we found resistance at 3361. 1, 2, 3, 4, 5, 6, 7 rejections. It became support, and now we're looking to hold it on the back test. The first pullback, there were no big red flags in terms of volume. In looking for a bull entry, you can see the bull volume very clearly outweighs the bear volume. We did have one candlestick in there that had a bit of a spike, but you see the lower wicks with bulls buying the dip, and we ended up bouncing 0.3 of a penny above that support from 3364, got a nice 2% bounce, hit resistance, couldn't break above it, and then we pulled back, and we did end up breaking that support temporarily, but very quickly the bulls recovered it and rejected from resistance again. We pulled back and bounced right off that support, 3359, and then another 2% bounce. So just using this history level, this previous price history level, knowing it was tough resistance, looking for it to hold as support, and there was one time where it would have failed us, but then again, it would have only failed us really short term before the bulls turned right around and saw a really strong rally off of that level. So this is the 5-minute time frame. You can see the bounce perfectly off that support after we did lose it. So again, it's not perfect. There are going to be times where the price dips a little bit below, a little bit above, but it's a nice guide to be looking at, and we certainly know to be looking bullish at this level, and it's giving some 2% moves twice now off of that level to end last week. So resistance is very clearly right around the 343 level, and let's put a resistance line up there and see where we've been rejecting from most consistently, and I would put it right on 343, and you can see we struggled up there on the original move. Here's another rejection, 3, 4 rejections. So very clearly, bulls are struggling at that level. We can have an uptrend line on this 5-minute chart, looking to see if the bulls are going to remain their strongest here. And that would be maintaining that uptrend line. So we've got a tightening range forming on the 5-minute to keep an eye on. And really, you're only using the 5-minute if you are short-term trading, either a day trader, or if I were looking to swing for a day or two, I would definitely check out the 5-minute time frame as well. But otherwise, you're checking the daily, the hourly, the weekly. So the bulls have made a nice recovery. They broke the lower high pattern, and now they're forming higher lows and higher highs. And if we can get above this new resistance of 345, we're looking up at 350, 3506 to be exact, as the next resistance. And that level's coming from that gap down open we had and a small bounce attempt. And the high of that bounce attempt is that next resistance we're looking at if we can get over that 345 level. And how did we pick out 345 resistance? So after that little bounce attempt, we saw another little bounce attempt, and we rejected from 3455. So in one of my videos, I think it was 2 videos ago, after 3361, the next level of resistance we highlighted was 3455, because of that little bounce attempt and rejection and further dump to the downside. And we ended up rejecting from 345, a half of a penny below that level. So it's always nice to look at previous price history to look for support and resistance levels. And again, it's not always exact. In fact, it's pretty rarely exact, but it gives you a nice general idea to base your game plan and your trades around, and you know when to bail if something is not working out the way you would have expected it to. So that's what we're looking at for natural gas. Let's check actually the daily and weekly time frame to see how we ended this week. Still bulls in control, 4 green days in a row, and now we're going to look to form higher lows and higher highs to try and turn things around after that all-out dump we saw 2 weeks ago. Looking at the weekly time frame, we have a big-time bullish reversal candlestick, nice strong move, and what stands out first thing when looking at this chart, volume. Increasing volume this whole time. Bears had very high volume last week. Bulls beat that volume, and they're closing up near the high of the week. So a bullish reversal candlestick, we need to see some confirmation of it next week with a nice solid green week. There is a gap to fill all the way up at 367. We'll be keeping our eye on that, but one step at a time. We have a bunch of resistance levels to look at before we set our sights on that gap fill, and the bulls looking to continue this move, and if they can hold 336 early the first couple days next week, we will know they have some nice new support established. I appreciate you watching. We'll check back in as always. Have a great long weekend.